Yes, thank you, Engineer Patrick. Just give us a few minutes. We confirm that everyone who's on the program has joined us before you can lead us in a word of prayer. Thank you so much for volunteering. So let's give people 2 more minutes and then we start at 5 minutes past 3. Grace, confirm that the CBK team is on board and the president as well.
The president, not yet. Let me reach out. The CBK team is on board. They have quite a number of representatives. So let me call the president.
Okay.
Engineering, we have.
Yes.
Okay, please proceed. We have president on board. We can proceed.
Okay. Engineer Patrick, are you ready to lead us in a word of prayer? Engineer Patrick?
Yes, I'm
you
here.
can unmute. Please proceed. Thank you.
Good afternoon, everybody. Thank you so much, moderator, for allowing me the opportunity to offer a word of prayer. Shall we believe and pray? Dear Heavenly Father, in the name of Jesus Christ, we thank you for this wonderful and excellent opportunity that you have allowed us, O Lord, to again meet as the engineers fraternity to be taken through such an excellent topic. especially on investment. We thank you because of helping us, oh God, to be taught and guided into the area of investing in treasury bills and in bonds, of God. So we pray that as this great presentation will be going across, the Lord, you'll help us to have a wonderful participation from both the audience, O Lord, and the trainers, O Lord, as we go through this afternoon, O Lord. And we pray that there'll be absolute focus as we are taken through the central message of God. How we pray that, Father, you may help us, O Lord, also to have such opportunities in the future, even to learn how to move ourselves to areas of investments of God. We thank you for the organizers of this same meeting, O Lord. We thank you for the moderators. We thank you for the audience, O Lord. And we pray that, Father, you help us, Lord, that as a result of this, O Lord, the engineers will go to the next level and better their skills in investments, O Lord. As we listen, O Lord God, we pray that your presence will be with us, O Lord. For this we pray in Jesus' name. Amen.
Thank you, Engineer Patrick Otoma,
Thank you.
for leading us in our word of prayer. Engineer Patrick Otoma is the Vice Chairperson of Membership and Welfare, which is the committee that has actually organized for this webinar in collaboration with the Central Bank of Kenya. So without further ado, I'd like us to move on with the program. So I'll give my welcoming remarks. I'll be very brief so that we can save on time. And first of all is to observe all protocols. Ladies and gentlemen, good evening. Although it's not evening, but good afternoon. I want to extend a very warm welcome to our esteemed members at the IK, the non-members who have also joined us, and our distinguished speakers of the day from the Central Bank of Kenya. Thanks for making time to be able to join this wonderful discussion that is very timely as well. We are truly honored to have you join us today for this insightful webinar on investment opportunities in Treasury bills and bonds. It is indeed a timely discussion as we explore avenues for financial growth and stability, either as young professionals, as professionals who are seasoned in the field, and also as students, because when students join industry, they'll be able to be informed on the various investment opportunities that we have in our country. As engineers, we often excel at solving complex problems and building a sustainable future. But today we have a unique opportunity to intentionally focus on how to build our finances through investments by learning from the experts. The Central Bank of Kenya's expertise will undoubtedly equip us with valuable knowledge to make informed investment decisions now and in the future. We are going to have the mode of operations today during this webinar will be through presentations, and also we'll have a Q&A session at the end, which will be interactive. But also feel free to put any questions on the chat as the presentations continue. I would like us now to move to the President's remarks. And it is now my pleasure to invite the IK President, Engineer Shama Kiteme, to officially open today's webinar and set the tone for this discussion, and also ultimately invite the CBK team to make the presentation. Thank you so much and welcome, President Engineer Shama.
Thank you very much. Can you see me and hear me?
Yes, yes, President.
Thank you very much. Members, I can note that we are almost 290 of us, and I know many had registered for this webinar. It's my privilege and joy to engage with you this afternoon. This engagement, organized by the membership committee, is one of those that the Institution of Engineers of Kenya has deliberately designed to be able to add value to our members. it is very clear from them that they need to see the institution adding value to them. And the webinar on investing in treasury bills and bonds is one of the many undertakings that the council has taken to add value to our members in terms of them bringing them to understand various other sectors that we don't ordinarily operate in and function in. We're majorly in the infrastructure sector, and we may miss one or two things if we don't have interest in what is happening in other areas that are equally very important. Members, you'll recall that yesterday we had a session delivered by a representative from Treasury, helping us understand the budget statement of 2025-2026. And therefore, we do continue with this engagement today and have an opportunity to hear from CBK and have a better understanding of investing in treasury bills and bonds. Our undertaking is that we'll continue to engage our members on important knowledge-sharing forums and valuable information, webinars, trainings, and programs, so that our members are current with what is happening. They understand better the climate that we are operating in, and they are far more exposed because it adds value for being an IK member. We want to make our members know that we are also engaged very aggressively in terms of advocacy for the interests of our members. Just this morning, we were at City Hall engaging with members of County Assembly at Nairobi County, discussing on issues of approvals. Later this year, we are engaging with the county government of Makueni, entering into memorandum of understanding on how the Institution of Engineers of Kenya can work together with that county, but also generally all the counties, in terms of making sure that we are relevant in our society and we are deliberate in adding value. My plea to members is that we continue to support the initiatives that the council is conceiving and regularly updating our members, because it makes sense and it adds meaning that when we come up with initiatives, members find interest in them and participate. Otherwise, they will not be achieving the purpose that they were meant to achieve. We are trained to be leaders, and we must be leaders in all frontiers. We must be competent technically, but we must also be competent and knowledgeable on all other spheres of life. We have realized that many a times engineers have just become spanner boys when we do not take initiative and be part of conceiving the big visions. Therefore, as an institution, we are not. Can you hear me? Someone try to mute me.
Yes, now we can hear you, but we lost you for a minute. I don't know what's happening, Grace.
Okay, can I repeat what I said so that we don't waste more time?
Please. Yes, please.
So what we're saying is that we have realized on the need to engage more aggressively in terms of making sure that engineers are not just merely spanner boys, but we are involved in the conceptualization of the biggest ideas that are moving the economy today. And that's why today's webinar is very relevant in this regard, because it makes us to add, as part of life skills and understanding, soft skills, if you like it, understanding issues of investment. And this fits very well to be organized by a membership committee, because we must continue in adding value to our members, like I began by saying. Personal development is very important for us. And as we continue to appreciate and understand the environment around us, we become better. Financial literacy, smart investment strategies are necessary for us in every stage of our careers. We know our world today is very dynamic and unpredictable at times. I'm aware you have heard that acronym VUCA. And so in today's dynamic and sometimes unpredictable economic landscape, it is really essential that we build financial resilience for ourselves, for families, for our firms, and generally the communities that we serve in and we live in. Government securities, treasury bills, and bonds are reputed to be fairly safe, and I will not say this because it must be. The speakers today to clarify that, but also regarded to be reliable. And so for us to build wealth and preserve capital, they seem to be a safe bet, and we'll be hearing that in the next few minutes. Central bank is a vital player in the economy. You all know the Monetary Policy Committee. Whenever it releases their statement, everyone is interested. They also carry a lot of research whose dissemination is very helpful to the economy, and their expertise and leadership in financial education, market development are invaluable. We couldn't have gotten a better partner to have a conversation this afternoon. We're very grateful that this collaboration is adding value to our members, and members will be informed as we continue in this engagement. Members, I also want to let you know that we have continually engaged in all the sectors. You know, we have task forces covering water, sanitation, building sector, affordable housing, oil and gas, energy, agriculture, universal health, digital, highway, and telecommunication. And we are in all these sectors, we have been running webinars because we have developed policy proposals. And these webinars we are using to engage with members for validation, so that when we engage and give policy proposals, they are reflecting the ideas members have. Our advocacy efforts have now shifted to being more proactive than reactive. We are scanning the environment and understanding what is happening. We're looking at the threats and taking positions and advocacy positions that are more proactive than reactive. And for this reason, members, we're very proud that you could find time and sit to listen to the conversations this afternoon, which is soon crossing into an evening, the next 40 minutes or so. But we are very grateful that you could join us, and we want to plead with you to continue taking part in the initiatives that the Council will continue to roll out. So thank you very much, and I wish you all an interactive session which is beneficial for all of us because it is very relevant. Thank you.
Thank you, President, for your opening remarks for this particular webinar. Grace, can we see the program so that we can move to the next item? And I think we are moving straight to the CBK panel. Leonard?
Thank you very much, Lillian. You can hear me?
Welcome. Yes, thank you. Proceed.
Okay, and I hope you can also see me. Let me see if that's possible. Maybe as that comes up.
Yes, we can see you.
Thank you very much, and Lillian and the president for that strong message opening the session for us. It's a pleasure to join you today, and even greater one to be speaking to such a distinguished and dynamic group of professionals. On behalf of the Director of Financial Markets Department here at the CBK, I'm pleased to participate in this important engagement with members of the Engineers Institute of Kenya. As professionals, you play a critical role in building our nation's infrastructure. Your interest in understanding and participating in government securities market is both welcome and timely. We say that engineers turn plans into projects that impact the world. And at CBK, we are excited to talk about how you can also build wealth, not just bridges and buildings. Today's conversation is all about investing in government securities, usually referred to as Treasury Bills and Bonds. These are not just investments for the big players, the institutions. They are also accessible, secure, and designed for the retail investors or the individuals such as us and you guys. At the CBK, we are committed to making government securities more accessible via the CBK DAO CSD, which will be showcasing to you in a few minutes. This is the digital platform for investors to access and trade government securities. The DAO CSD is a versatile world-class financial market infrastructure that provides a simple, secure, efficient, and convenient process to invest in government securities. We are here to demystify the process and to answer your questions. Whether you're looking to diversify your investment portfolio, save for a project, or simply earn passive income, this is a smart, low-risk space to explore. We encourage you to take full advantage of the opportunity, and we are here to guide you through every step. So let's dive in it. Welcome to a great session. Thank you. So I think we move back to you, Lillian.
Thank you, Leonard, for introducing CBK and the opportunities for investment. I think now we move to the next speaker from CBK to make the presentation. Leonard.
Good afternoon, everyone. All protocols observed. Ladies and gentlemen, good afternoon, good morning, good evening from wherever you're tuning in from. Allow me to sensitize you on investments and in particular government securities. I hope you can hear me.
Yes,
we can hear you.
Okay, thank you. I will endeavor to demystify the what, where, how, when, and who of government securities. Delving right in, CBK is the banker of, advisor, and fiscal agent of the government of Kenya. And on behalf of the National Treasury, CBK acts as the primary market and issues government securities, that is the Treasury Bills and Bonds. Government securities are considered as a safe haven, whereby they're very liquid, secure, and a cornerstone for conservative investment or a means of diversifying your portfolio. We have two types of government securities. We have Treasury bills and Treasury bonds. I'll discuss the bills then the bonds. So Treasury bills are short-term government securities. They range between 3 months and 1 year. They're normally issued on a weekly basis through an auction and at a discount. They pay their interest upfront, and they're traded over the counter. Treasury bonds, on the other hand, are mid to long-term securities ranging between 2 years to 25 years. They're issued on a monthly basis, and they pay interest, which is known as coupon in regards to bonds, on a semi-annual basis. They're normally advertised through a prospectus, which describes the details of a bond, like the tenor, the type of bond, the deadlines for making payments. They're normally publicized on all our social media and our website, the Central Bank of Kenya website. On closure of an auction, the treasury bonds are normally listed at the Nairobi Securities Exchange, and they are available for buying or selling. Allow me to describe the type of biddings. We have two types of bids. We have competitive bids and non-competitive bids. A competitive bid is whereby an investor chooses the preferred interest rate. This may either be accepted or rejected depending on the market's dynamics. So for you to bid competitively, you need to at least understand the market's dynamics. Alternatively, there is also non-competitive bidding, where an investor accepts the average market-determined interest rate at the close of an auction. The minimum amount you can invest in government securities is 50,000 Kenya shillings. And the minimum competitive bid is 2 million Kenya shillings. So any bid below 2 million is an automatic non-competitive bid. The maximum non-competitive bid limit for an individual CSD holder is 50 million. So for instance, we have 3 treasury bills. You can invest in the 91 day, which is the 3 months, 182 or 364, all for 50 million Kenya shillings. So the buffer between 50 million and 2 million, an investor has the option of either bidding competitively or non-competitively. Any bid beyond 50 million is a mandatory competitive bid. Investors can place bids in multiples of 50,000 Kenya shillings. So who can participate in government securities? Basically, everyone is eligible to place investments in government securities, either a local, someone in diaspora, or a foreign entity. For them to invest in government securities, you need to have a CSD account at the Central Bank of Kenya. And CSD accounts can be opened for individuals and also for corporate entities. Individuals can open them individually or as joint accounts, either with spouses, siblings, or the likes. You're spoiled for choice, whereby an investor can either open directly with Central Bank of Kenya, absolutely free, or through an authorized custodial institution. That may be a commercial bank or an investment bank. So why invest in government securities? They offer capital preservation. They're very safe. Since they're backed by the government, they are risk-free. They also offer returns on investments, which are reliable cash flows. They're predictable. You know the exact date you will be receiving a coupon, for instance. Then you can be able to budget yourself or make commitments on that criteria. They're also very liquid. We have short-term securities, meaning 3 months, 6 months, 1 year. So you can be able to get your returns soon enough and your principal amount. They're also tradable at the Nairobi Securities Exchange through a broker, of course, and they can be also used as collateral. In the event that one needs to break contracts, you can be able to divest by rediscounting at the Central Bank of Kenya or through the NSC using a broker. Additionally, investors are able to bid competitively or non-competitively. So those are the benefits of investing in government securities. Let me discuss the platform on which you can invest in government securities. It's known as DAO CSD. CSD stands for Central Securities Depository. DAO, on the other hand, was deliberately adopted to signify the role CSD will play in our financial and capital markets. Traditionally, sailing vessels were used to facilitate trading between East African coast and the South Asia and Arabia. The name fits the new CSD in the sense that it serves to facilitate trading of government securities both locally and across borders. Additionally, DAO is a Swahili word meaning stakeholder, which resonates with investors, and literally stewardship, which is a role that resonates with CBK's entrusted role of monetary policy. I'll give you the requirements for opening, So the features of the DAO CSD have enabled it to be an award-winning central bank infrastructure. Due to its simple, efficient, and convenient way of investing in government securities, it has facilitated more investors investing in government securities, both locals and foreigners. It's a web-based platform. You can download the app on Play Store, App Store, depending on your phone, or if you're using a laptop, we have a portal on our website whereby you can create an account. The primary market for this for DAO CSD enables online placement of bids. You can cancel your bid also online. The auction results are released and each individual is able to access the results on the app and be able to make payments. There's also online rollover, which is reinvestment of your security. You're able to track your investments basically. It has also facilitated secondary trading, whereby you can buy and sell a bond through the platform. All the transactions, the securities transfers are done through the DAO CSD. And also you can pledge a security as a collateral for credit. Portfolio holdings are normally viewed on the platform. It makes it very convenient. You can track your investments at any point. You're able to see when the next coupon is due, or when, let's say, a treasury bill is maturing, the redemption that is. And securities valuation. So it has made it very convenient. You can be able to also download a statement and use it maybe for audit purposes if it's a corporate, or for applying for a visa, for instance, for visa applications. It's very convenient. Requirements for opening a DAO CSD account are 5. You will require an email address, a local bank account, and soft copies of 3 documents: a passport size photo, KRA PIN certificate, and your national ID, in case that's the document you use to open the bank account. If you're a foreigner, then a passport is applicable, or alien ID. Here are, I'll share a video demonstrating how to invest in, how to open the CSD account. And we have dedicated call center for government securities. In case you have any queries, you can reach out on this number. Also, we have a user guide on our website that can give you the nitty-gritties of how to place a bid if you're unable to maybe call. Thank you for lending me your ears. Happy investing.
Looking for a safe and secure way to invest your money? The DAO CSD platform makes investing in government securities easier than ever before. Let's walk through how to get started. Step 1. Visit the Central Bank of Kenya website or download the Dow CSD app from Google Play or the Apple Store. Step 2. Next, click the investor portal link on the website or app. Step 3. Click Create Account to start the registration process. Step 4. Enter your email, username, and password of choice. Agree to the terms and conditions, then click Start Registration. Step 5. In the drop-down list, select Physical Persons and provide your details: name, date of birth, KRA PIN. Step 6. Enter your contact details, which include your main phone number and email address. Step 7. Enter the settlement details under Individual Account Option. Step 8. Upload mandatory documents such as your photo identification document, KRA PIN, and KRA exemption where applicable. Step 9. Use the email token sent to your inbox to confirm your details. Once approved by your settlement bank, you will receive another notification.
Thank you for that presentation, Madam Salma. And I'd like to now move to the next session, which is the interactive session on questions and answers. And I'd like to bring on board CBK expert, that is Charlene. I hope I'm pronouncing your name correctly. Charlene, you can take over on the Q&A. We have questions on the chats, but you can also proceed to ask for hands where members would like to voice their questions. Charlene? Leonard, is Charlene in the room?
Yes, Lillian, we have Charlene with us in the room. She's getting in just in a second.
Okay. I hope she can be able to see the questions that were posted before.
Yes, we can
Great.
see some of the questions in the chats.
Mm-hmm.
Charlene, are you there?
Yes, I'm here, Leonard. Thank you so much. And good afternoon, everyone. My name is Charlene, and I will be taking you through the Q&A. I hope you can hear me. Someone please confirm if you can hear me before we proceed.
Yes, you're audible. Proceed.
Thank you. Thank you. So the first question that was asked by Teddy Gishaba and Beth Mwangi was on the pros of choosing to invest in Treasury bills and bonds as compared to MMF. So Teddy put it that there have been talks that MMF have a lower risk level. I would like to draw this question back to Mr. Leonard Bodo to be able to provide us with an answer. Leonard, please. Leonard, if Leonard is not is muted, is Nancy on the call? Lillian, I think our team is muted.
Their co-hosts, they can unmute themselves. Leonard, please confirm, and I can see Nancy as well.
Yes, we are here. Sorry, I think I'd been thrown out. I'm back, and sorry for that mishap. Yes, so Charlene, you were referring to the first question by Teddy? Yes, and I see Teddy is asking about the difference between Treasury bills and bonds and the money market funds, and why perhaps somebody would go for one vis-a-vis the other? I think this is a very good question. I've seen somebody else also in the chat asking the same question, and therefore perhaps in this response, we will have answers for both participants who are asking this question. So first of all, government securities, as we said earlier, this is just one of the investments that you have on the plate for you to choose as you make a portfolio as an investor, whether an institutional investor or individual investor. You can choose to have different assets in your portfolio, and one of them is government securities that we are discussing today. So we know that government securities all over the world are usually the lowest risk in terms of investment risk, because governments usually back those securities. Governments
Okay. I hope you can still hear us, Lillian.
No, I think I lost you for a minute or so.
Okay.
We lost Leonard for some time, but I can hear you.
Okay, Leonard, were you done with your response? Okay. As we wait for Leonard to come back, we will take the second question. That question was on the difference between competitive versus non-competitive bids. I will give that question to my colleague, Mary Mutua. I would also like to join that question with a question that has been asked on the definition of the par, premium, discount, and face value definition. So I will let Mary answer those two questions, and then we can proceed from there. No, Mary, we cannot hear you. Lillian, we seem to be having a problem with unmuting.
Yes, Charlene, you can hear me now?
Yes, we can hear you, Leonard.
Yeah, but we're also having, I think, challenges from a network perspective on our side, and we apologize for this. Maybe as Mary comes through on the competitive versus non-competitive bidding, allow me to just proceed, and Charlene will manage this as we proceed. Maybe on the first question, just differentiating between treasury bills and bonds and money market funds. And I began to mention that government securities are usually backed by governments and therefore seen as risk-free assets, whilst money market funds usually are a mix of instruments, including government securities, especially short-term ones, treasury bills, commercial paper, which are usually corporate instruments, and even bank deposits. Institutions that offer money market funds will usually put these instruments together to create what they call the MMF. And therefore, there is a level of institutional risk or some credit exposure, which brings an additional layer of risk on investments such as MMFs compared to government securities. But as we said, this is information that we are sharing for you to consider as you make your decisions. You usually normally also reach out to an investment advisor to make investment decisions across different financial assets. Treasury bills and bonds or government securities also have predictable returns, usually fixed, and we call these fixed income securities because you can predict the amounts of interest or coupons, as we call them, that you receive in future during the life of these instruments. Whereas in some cases, money market funds would have variable returns in future for you as the macroeconomic and financial market conditions change. the providers of these instruments also vary those returns based on how things move in future. Of course, you might find that sometimes you have higher yields on the money market funds compared to maybe government securities, and this is to be able to compensate the investors for the additional risk layer that I mentioned that has to do with how the institutions are managed, or we call that package of institutional risk as something that adds risk to the investment. Of course, there are other differences such as on taxation. You might find that there could be some taxation on maybe money market funds, depending on which jurisdiction we are looking at, or government could be offering securities that are not tax-free, and that is also something to consider. The cost of investment is another factor to look at. We are offering, for instance, a platform that we've just taken you through, the DAO CSD, which is the the portal through which you can participate in these investments directly right from your phone through the app, and you have no cost that you incur. You can invest directly here at the central bank as an individual. You can even trade your bonds or in the secondary market at the Nairobi Securities Exchange right from your app. But for some of the other investments, perhaps you may have to incur some costs depending on how they deliver those to the investors. Of course, that's just a few examples of the differences between these two major asset classes. Back to Charlene.
Thank you, Leonard, for that very comprehensive response. I will let Mary take the two questions, and then we can proceed from there.
Good afternoon, everyone. You can hear me?
Yes, we can, Mary.
Okay, thank you, Leonard, and thank you, the team. So I'll be giving the difference between competitive and non-competitive bids. And when an investor bids competitively, we say that bid is participating in the auction, which is allocated according to the price rates specified in the bid. For example, if an investor quotes a rate of 10, 15, 20, and all those bids are successful, then it means those investors will pay at different prices according to their rates. And on non-competitive, we are saying it's a bid that is allocated at the weighted average interest rate determined at the auction for the accepted bids. The advantage of bidding competitive and non-competitive are when an investor bids competitively, they have control over the yields. That's the rate that the investor quotes. And this has the investor has a potential of securing a higher returns since they are able to determine to price their bids. Again, on competitive bids, it's mostly for large investors who are bidding large amounts of money. This includes banks, pension funds, and insurance companies. In terms of flexibility for the competitive bids, it's an advantage to bidding competitively because they have done market analysis, they know the market conditions, and hence they have that picture and they are able to bid at high rates to get high returns. The pros of bidding non-competitively, one of them is that it's not a sure bet. The investor might miss out because once we conduct our auctions, if an investor quotes a rate higher than the cutoff rate in the auction, those investors will lose out in those investments. So there is a risk that the investor will not be successful. Then when we go to the other question that Charlene had asked me to tackle was, in terms of non-competitive, one of the advantages of bidding non-competitive is that the investors will be successful. Then when we move on to, there is a question that was talking about face value par and premium. So when an investor prices their bid, they can pay at par, they can pay at a discount, or they can pay at a premium. If the investor pays at par, it means it means
We lost you, Mary.
Sorry, can you hear me now?
Yes, proceed, please.
So when an investor pays at par, it means the market price and the face value of the bond are equal. For example, if the investor quotes 100, if the investor invests 100,000, they'll be required to pay 100,000 after allocation. Then when an investor pays at a discount, it means the investor will pay a lesser amount than the face value that they invested. And when they pay at a premium, it means they will pay more than the face value that the investor quoted. So a case scenario is, for example, we have a bond that the coupon rate is 12%. So if an investor quotes a rate, let's say of 14 and is successful, that investor will pay at a discount because the coupon rate is lower than the average rate. And if an investor quotes a rate like, let's say 10, which is below 12, that investor will pay at a premium. But if the investor quotes at exactly 12, that's at par with the coupon rate, the investor will pay at par. Thank you.
Yep. Thank you, Mary. Thank you, Mary, for those. And Shalim, allow me to come in at this point. I can see there are a number of questions in the chats building up, and in the interest of time, if you allow me, Lillian, I just want to jump through over each of these questions very fast and see how we move from there. If there are any clarifications that are required, maybe from those asking the questions, then we can make those clarifications. That's okay, Lillian?
Yes, Leonard, proceed.
Yes, thank you everyone who is posting the questions. We can see the names, the one from Joy on competitive and non-competitive that Mary has answered very well. I hope that is comprehensive. Vanessa asking about the difference between the discount par and premium. Just before I move on to the next questions, on those two, all we are saying is, as a retail investor or an individual investor, such as everyone here, you have two ways you can come into the auctions to buy the securities. You can come either competitively or non-competitively, meaning if you come competitively in the competitive pool or window, means you have information about the market, means you have information about how you price the securities. And for most starters, normally you'd come non-competitive so that you are not required to provide a price on your bid. You're only required to provide the amount that you want to invest. And then the price will come from the bids in the competitive pool that are going to be successful after the auction. So the price for the non-competitive bidders come from the successful bids in the competitive window. So as a start, any investor will always start in the non-competitive window as they continue to learn the markets and how these securities are priced. So the concept of discount, par, and premium is all explaining the aspect of how you price these securities. So if you know how to price the securities, mostly you'll be looking to buy them at a discount because you get a difference, which is usually referred to as a discount from the amount that you're investing. For instance, if you're investing $1 million shillings, then you'll be asked to pay something less than $1 million, and the difference will be what is a discount return. But a par payment will be payment equal to $1 million. So it means the yield or the price that you gave us is equal to what the market price for the auction is. And if you've been asked to pay at premium, then it means you'll be asked to pay more than what the price or what's the amount, the 1 million shillings that you are actually investing, that would be your nominal value on the investment. Maybe that's maybe an easier way of explaining this. And then Kamau is asking, very insightful presentation. Is there Sharia compliant T-bills and T-bonds that Muslim citizens can invest in? This is a very good question. I think I will jump this as I leave it to Salma to come in to respond to that as I move on to Beth, who's asking, explain the pros of choosing to invest in T-bills and bonds as a compared to money market fund. I think I did that from the first explanation, the first question that was on this area. Jeremiah is asking what's the difference between competitive and non-competitive bidding. I think this has also been tackled. David is asking how long do it take to open CSD account and open trades? I think this one is been answered through the presentation, but basically it's virtually very fast on the platform. We're calling the DAO CSD. All you need to do is sign up, and as you sign up and fill in the details that the system asks for, you submit those details to your bank, and one of the details you submit as you sign up is really also the bank, your bank details, and the bank will be able to, within 24 hours, be able to give us what is called a KYC assessment, know your customer assessment, to say that they know you as their clients, and immediately they do that, you have your CSD account, which comes as information to you on the platform. So I think this is just a high level explanation of that. And is the DAO CSD app Android phone friendly? Yes, this app is available on both the App Store and also the Google Play Store, and therefore both friendly for Apple and for Google solutions. And then John is asking what's the steps for participating in the secondary market. Again, all these steps are available in the DAO CSD platform. You have a tab that takes you to how you can sell or buy your bond in the secondary market. Quite easy. As you sign up for the CSD account or the DAO CSD account in the process that I've just explained, you will also find a field that asks you to choose the brokers that you'd want to be your brokers in future as you transact in the secondary market. And normally you choose any brokers, all the brokers in the market are on the list. And any time you want to sell your bonds or buy bonds at the NSC, you'll just be able to sell through those brokers that you have selected on the app. And they'll immediately, you normally would do that through a tab that gives you an option to issue instructions to either buy or sell, and the brokers will be able to see those instructions and be able to execute the transaction for you. Donald is asking, is your DAO CSD tied to a single bank or can it use multiple banks? For now, the CSD account is tied to one single commercial bank account, and that's one of the fields that I mentioned that you need to provide as you sign up for the DAO CSD account. Vanessa is asking, what's the difference between a clean price and a dirty price? I think it's part of the question that Mary was answering around discount, premium, and par price. But here, what we are saying is that a clean price, and mostly these concepts apply to bonds as opposed to treasury bills. A clean price is a price that does not contain coupon or accrued interest on the bond. So usually our bonds pay interest every 6 months. And if you make a transaction or trade the bonds during this the 6-month period, within the 6-month period of a coupon period, what we say is that if you do that transaction anytime after the last payment of coupon date, the amount of interest that you've earned since the last payment of interest up to where we are at the time you're trading is what is usually referred to as the accrued interest or accrued coupon, which is usually netted off from the total price of the bonds at the time you're trading. And what you arrive at is a clean price. And therefore the dirty price is the clean price plus that accrued interest. I think these are concepts that are available, explained on our website if you can visit us, or check with us through our platforms for further clarification. Collins is asking, there are media reports that Kenya's debt is unsustainable and that the government might default on its obligations. In such a scenario, will our investments be safe? And this is a very good question. Our response to this is that, first of all, we've not seen Kenya default on its debts from history in time. We haven't seen this scenario. And what happens is that Kenya's public debt, just like for other countries, is managed in a very prudent manner. The debt levels and the mix of those instruments that you find in the portfolio, both in the domestic and external portfolios, are highly structured in a way that all the metrics that need to be met in terms of the composition of the portfolio are very well managed. What I mean by this is the indicators that define a public debt portfolio. And here we're looking at the composition of instruments. The treasury bills and bonds that we are talking about have different tenures in terms of time. They have different pricings in terms of their yield and price on them. They have other features that we look at, and therefore how we go to market to issue these securities is usually a very strategic process that involves a lot of considerations. What we have in the Kenya debt portfolio is actually a very sustainable portfolio. We have not seen Kenya, and that is very well managed. We have the Public Debt Management Office, which we refer to as the PDMO, that is in charge of this whole business of public debt management on behalf of Kenya, and the central bank acting as the fiscal agent, just trying to show you the institutional arrangement that is in place in managing Kenya's public debt that is very strongly watched and continues to be sustainable. Sandra is asking, what's the current interest rate for treasury bills? I think the rates that we have currently are 91 day, which is 3 months T-bill, is trading at 8.3%. The 182 day, which is the 6 months T-bill, is trading at 8.5%, while the 1 year T-bill is trading at 10%. These are the levels where we are, and these have been very stable in line with monetary policy directional decisions that we've been seeing. And then we see Nancy is asking, suppose one prefers to invest in hard currency, such as the USD, what do you advise? Of course, the presentation we're having today is restricted to investments in local currency, which is the Kenya shilling. All these investments we are referring to here are domestic government securities, government of Kenya securities, and they are all denominated in Kenya shilling. What we have as non-Kenya shilling investments, which are offered by government, are usually part of the external debt instruments, and one of them is the Euro bonds, which usually are available in the international market. But we also do have local investors that participate in the Euro bond market when Kenya is issuing Euro bonds, whether as institutional investors or through institutional investors if they are retail investors. So I think that's how you could access those. Matthew is asking, this has been an educative presentation. It is a compliment. Thank you, Matthew. Engineer Lillian, I think what are the ranges of the percentage returns that have been offered in the past? I think this is what maybe I've just presented in terms of the treasury bill space. We have those interest rates that are currently prevailing on the 3 treasury bill tenors. But on the bond side, we do have most of our bonds interest rates ranging from about 12% to about 15% across the tenors. And our tenors range from 2 years to the longest that we have in the portfolio, about 25 years. And these tenors on our bonds are available across all that space of time. So investors choose these tenors based on their preferences. Whether you could be looking to invest, to wait to use the money for a project in future, as I said in the opening remarks, then you would time your projects in line with the tenors that have been offered on the bond side to be able to receive the money back with your returns at the end of that period for you to conduct your project. Or you could just be, putting different tenors in your portfolio as part of a strategy a passive strategy to receive returns on those bonds. And then George is asking, the sound was lost. Sorry, I think these are just a compliment. Sorry for that. Then Edmond is asking, I have been having keen interest in infrastructure bonds and participating in it, but the greatest challenge is during the transfer of funds between commercial banks and CBK, and most of the time, one has to school the tellers of the bank who are so green on how to make payments. I think this is a good question. I think I'll push this to Nancy. You want to respond to this one? I hope now, Lydian, you can still hear us.
Yes, we can hear you, Leonard. Yes, we can hear you.
Okay,
Yeah,
yeah.
please proceed.
Thanks, Leonard. Yes, with regards to the payment journey, I can confirm that we are working closely with the banks to enhance that process. so that you can also be able to do it online through the available apps that your commercial banks have, or through their specific internet banking platforms. So as soon as that journey is streamlined, we shall communicate with members of the public and we'll be able to do that directly. We have taken on your feedback and we are in communication with the banks to resolve that journey for you.
So thank you, Nancy, for that response. I think this is very important to, to put forward as you have. Of course, we are on a journey. Some of the banks have already been able to provide this journey, as Nancy has said. You're able to seamlessly transact through those banks that have been able to interface with the DAO CSD properly for that payment to be smooth. But we also aligning the journey also for mobile money payments as part of improvements that we are doing on the platform. And there are many other initiatives that we are working on to make sure this continues to be a world-class platform for investors to participate in government securities. And then Robert is asking, do you mind educating us on the infrastructure bonds and whether they are available individual investors? Yes, indeed, Robert. The infrastructure bond is one of the other classes or asset classes that we have in our portfolio. And the difference between our infrastructure bonds and the normal bonds is just the taxation aspects. Infrastructure bonds are not taxable. All the returns that you get from infrastructure bonds are fully tax-free. And then the proceeds of these bonds, when we raise the money from these bonds, are used for specific projects that are supposed to be funded from the budget. I think this is the major difference, yes, and indeed, these infrastructure bonds are available as part of our normal issuance calendar. You would find them coming in twice or thrice in the year. It depends on the plan that we have for a particular period. And then Kenneth is asking, how often do you float infrastructure bonds? I think I've answered that one. Don't know if there are further questions as far as I've seen. And then is it Eldridge? Eldridge, SBK has actively rejected expensive bids to cap borrowing costs. How might future auction rules be refined to optimize between cost savings and market participation? Nancy, you want to tackle that? Yeah, so perhaps, yes, this is, so the auction decision is usually, as we said earlier, so there are two pools. The competitive pool through which you receive bids from investors that are perhaps a bit more sophisticated, usually institutional investors and maybe retail investors who have information about the market. And therefore, these investors put price on their bids. And therefore, what happens is a multiple price auction where a decision is made based on the conditions that are prevailing at the time of the auction, in terms of the amounts to be taken, in terms of the pricing of those bids, in terms of the needs of the government, in terms of cash at that time, and in terms of the most important aspect, the borrowing target that needs to be met in the year. So those are some of the considerations that are usually looked at, and therefore you would find that the central the issuer, who is the principal, the National Treasury, works closely with the fiscal agent, the Central Bank of Kenya, rejecting some of the bids based on the factors that I've mentioned, and not necessarily just to curb borrowing costs. So there are many factors that are looked at points in time during the year to make these decisions. And as you look at the auction results, then you can infer that certain actions have been informed by part of what I've said in terms of the considerations. How might future? Yeah, I think that is part of the question that was asked by Edrich there. I don't know if we have further questions, Lillian.
There's a hand up. Please go ahead and ask.
Can you hear me?
Yes, proceed.
Yeah.
Yeah. Previously, we used just to pay for the T-bills online. Once you bid, then you are told it's successful. Then you just go. If you have the online banking or on your mobile, but now you have to go to the bank. A lot of questions, which I really find a bit inconvenient. The previous one was very nice. You just, once you're successful, you just go online, you pay, and everything goes. Why was that removed? And the bank the CBK could consider reverting back Although I asked and the bank was saying people used to make errors, but for me it was always seamless. I never had any problem. So the bank CBK could consider reverting back because that was very convenient. Thank you.
Yes, thank you for that question. I think I spoke to it previously when I was answering one of your other colleagues regarding the payment journey. When we changed the systems, the banks had to also integrate with this new system in terms of payment. So there are some banks that have seamlessly integrated their online banking and mobile banking platforms with the DAO CSD, and others are still working on it. So as I said, we are in communication with them and currently in the process of streamlining that payment process. So I believe in a short while, all banks will have integrated and you will be able to continue making your payments online. And as Leonard said as well, we are also looking to incorporate mobile money payments. So that should be able to ease the process of payment. Thank you.
Yes, thank you very much, Nancy. I think we also have part of our team also responding on the chats directly to some of the questions that are coming through. I don't know if we have any further questions, maybe. Delia?
Leonard,
Okay,
did you
Nancy.
answer the question on multiplier? I don't know
On the
whether I missed it or, yeah, there's a question there.
price option. Lillian, I didn't get that, please.
There's a question on the chat from, I think,
Yes.
Evan.
Yes.
Kindly walk us through the money multiplier and what is the current CBK money multiplier rate? I don't know whether you tackled that. I might have missed it. Secondly, does CBK operate gold-backed government bonds? I don't know whether you saw that question. And then the other question was on where members can be able to get real-time information on the auctions as they are available. I know there's a WhatsApp platform. I don't know whether they issue the WhatsApp channel platform. I don't know whether they issue alerts on bonds that are on auction as they unfold. Maybe you can clarify on that. I hope I'm audible,
Okay.
Leonard. Yes,
Yes,
thank you.
yes, I can hear you. Maybe Nancy, you want to come through?
Yeah, I'll take the question on the real-time communication. Yes, you're right. We do have a WhatsApp channel where we update real-time information, be it the statistics around the auction, any publications that the central bank is making, the Monetary Policy Committee reports. We also have all this information available on our website, so you can choose to access the information from either platform. From the WhatsApp channel, you can activate notifications so that anytime anything is posted, you get that alert and you're able to go in and read whatever we've posted there. So yeah, I think with regards to communication, that's how we do it.
Thank you, Nancy, on that. I think I had a question around, I haven't seen it on the chat, but maybe I had Evans, Lillian saying that Evans is asking about the multiplier. Can you walk us through the money multiplier? What is the current CBK money multiplier rate? And second, CBK operate gold-backed government bonds. Yeah, so thanks, Evans, for this. This is a bit technical, so we want to respond by saying that first, the scope of this particular session we having is really just on the investments on government securities, and of course CBK has a lot more mandate around so much that we do in the economy and the financial sector. We are not providing information on things outside investment in government securities. Perhaps if you may allow me to not respond on that, but on the second one is asking whether CBK operates gold-backed government bonds. I would say no. We do not have bonds that are gold-backed. As I said earlier, government securities are backed by the government, as inferred from the name, and gold reserves at the central bank is a completely different topic outside of this scope, and more to do with monetary policy. I know you could be coming from what maybe other central banks are doing currently as part of the monetary policy frameworks. I think this is something we may not want to discuss at this point in this very session, if you may. Thanks, Evans. I don't know if we have any other questions. Lillian, that are pending, because I can see some
I don't
responses
know
come.
whether you touched on the MKIBA. There's someone who was asking what happened to the MKIBA bond. I don't know whether you had seen that.
Not yet seen. I can respond, and
At least I'm
that's a
seeing the other questions are being responded to on the
okay.
chat, but that one hasn't been responded to. Yes, thank you.
Okay. Thank you very much for that, and thank you for that question as well. Yes, the Emakiba bond was a product that we saw in the period 2017 to around 2021. That portfolio finally came to mature at the end, and therefore we haven't seen new issuances around that product. The intention was actually to supply the low end with the very small denomination bonds at the low end of the market. I think the offerings were about 3,000 in bonds that were being offered. Yes, this is a product that's been re-energized currently. We're looking to have this offered on a much modern platform in terms of the IT infrastructure, and compared to where that was happening earlier, and also to be able to address a lot of operational risks perhaps that existed at that time, and offering it also in terms of a much better structure of the product compared to what we saw earlier. So we're basically re-engineering the product at this point, and we'll be seeing the outcome of that process in the near future. So I think that's what I can say. I can respond to that. Thanks.
I had raised the question, please.
Yes.
Making a comparison between the T-bills and bonds as compared to MMF in terms of liquidity, it is seen that the MMF is easier to liquidate within 2 days as compared to the T-bills and bonds, which usually take up to 90 or 180, 65 or 180 days. At the same time, the MMF, one of the investment options for the MMF is the T-bills and bonds. So why not just go for the MMF and let them work for you? Thank you.
Thank you for that question. I missed the name. Is that Teddy? Or yeah, I guess.
It's
yes.
Teddy.
Yes, and you're right, indeed. Yeah, but we need to just maybe contextualize something that you've said there, that perhaps MMF are easy to liquidate faster compared maybe to our bonds or treasury bills. And you say that perhaps for you to be able to access liquidity, you need to wait for the length of the tenor of the instrument. And you mentioned 180 or so days. So maybe just to mention that government bonds that we are discussing here are actually available in the secondary market at the Nairobi Securities Exchange. And that's something that we mentioned earlier in terms of that you can be able to trade them right from your phone. You can be able to, through your broker or through your investment banker, be able to sell your bonds anytime you wish. And all you need to do is to make that request to them, which you do through an instruction on the platform, which is an app, and they will be able to take it up in the market to provide you with quotes that perhaps meet the price level that you're looking at, and that could happen within a few hours or within a few days, depending on the availability of the market on the bonds that you're selling. So all we are saying is that the secondary market, which is the Nairobi Securities Exchange, is the avenue through which you access your money back or part of your money back in a bond by selling and buying if you wanted to accumulate your portfolio. So it is not that you have to wait until the maturity date of the instruments. This can actually be sold. And some of the other initiatives that we are undertaking, as we said, we're improving the payment journey through our banks for these securities. We are also, again, improving the possibility of having a much faster access to the market to be able to, for you to be able to sell securities at almost market prices at any time during the day and the night. So I think these are some of the things that we are doing. Thank you very much.
Thank you, Leonard. Thank you, Leonard, for clarifying on that. I see also there's a response there saying that there's a penalty just in case you withdraw early. But also I've seen a question on taxation, and can't remember the name, but they're asking whether the treasury bills and bonds are taxable in terms of the returns you get. Are they taxable?
Great.
Thank
you. Thank you, Lillian. Perhaps I need to maybe respond from the last one as I go to the earlier one. The earlier one was on what?
I've just responded to that on the chat.
Oh, you already responded, Salma?
Yes, I did.
On both questions?
Yeah, on whether treasury bills and bonds are taxable, yes.
Okay, and the first question was, remind me again, Lillian, or is it who? Salma, remind me of our question. I think I missed that on the chats. Lillian, the first question
Salma,
was...
if you don't mind, perhaps you can just repeat out loud.
Okay, so Margaret Mukami's question was if treasury bills and bonds are taxable. My response is that treasury bills attract withholding tax of 15% on the interest, while for bonds, we have two types. The fixed coupon bonds attract withholding tax. So if it's a bond ranging between 2 to 9 years, the withholding tax is 15%, while for a bond 10 years and beyond, the withholding tax is 10%. We have another type of bond called the infrastructure bond. This one is currently tax-free. I hope I have responded.
Okay. Yeah, that's how it is, Lillian, on that question. Thank you, Salma.
I can see a hand up, Lydia Mogore. Could you ask your question as we close? Sorry, Lydia, we can't hear you. Perhaps you could put your question on the chat if you're not able to connect.
Nancy, as Lydia comes on, there's also a question on chat on Kenya's plan to issue sovereign green bonds.
Okay, thank you, Lillian. Thank you for that. Again, yes, I think we can also say that this is outside the scope of this discussion. Here we're discussing domestic government securities, domestic treasury bills and bonds, the scope of external securities or securities that can be issued in the external market by usually in the space of we may not have information on that, but just to say yes, you're right. Sovereign green bonds, instruments that governments use to finance the budget deficits or part of financing instruments, and therefore these are definitely instruments that you see being referred to in what we call the medium-term debt strategy, which is a document that is published on the National Treasury website and shows the plan of government in terms of going to market in the coming financial year and beyond. So I think you're right. These are some of the products that have been looked for, considered at the time by the government. Right. Back to you, Lillian.
Yes, thank you so much, Leonard and Tim, for this very informative presentation and discussions. I think this has been very interactive, and I'd like to really appreciate the. Can you hear me?
Yeah, sorry, Lillian.
Leonard?
Just, because I'm looking at the agenda. Maybe we could ask Charlene, who was to moderate the Q&A, if she has any comments before you come in to proceed. Okay. Sorry for that interruption.
Charlene?
Thank you, Leonard and Lillian. I can see there is a hand up from John. We can give John a chance to take the last question before we move on. John, please. Then I can see then
hello?
that
Hello?
yes, John. Yes, John, we can hear you. Please
Can you hear me?
proceed. Yes.
Okay, yes. Thank you so much for giving me this chance. There's something pressing that I need clarification on, and it has to do with the secondary market, where when you try at those CFD to navigate through the stock brokers and blah, 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 the question I'm asking is, when I pick a stock broker, must I go and open a CSD account, or I use the same CSD with the one that I have at the CBK? Because that's a challenge. Sometimes you have a very attractive offer on the secondary market, but because now you cannot navigate through the brokers, then kind of you just lose such an opportunity. I will just need clarification. Thank you.
Okay, I don't think Millicent is with us.
Yeah, sorry. Can you hear
Millicent,
me?
do you want to take that question?
Yes, lost network a bit. Good afternoon, everybody. Thank you for your question, John. So if you want to trade in the secondary market, you first have to update your profile by linking brokers. So under settings, additional information, there's a column for NSE brokers. So just tick all the brokers and save. Then request your commercial bank to approve. Once they've approved, then these brokers will be linked to your profile, meaning if at all you need to trade, you can reach out to the listed brokers to actually trade for you if it's a sale or if you're buying in the secondary market. So brokers that are listed at NSE are conversant with Treasury bonds, and they're able to facilitate the trade from NSE system. Yeah. But in case you have any issues trading, you can always reach out to CBK. Our email, I'll put it on the chat so that you can be assisted accordingly. Thanks.
Thank you, Millicent. I can see John's hand, he's still up. I hope your question has been answered, John.
I'm done. Thank you. I think that's okay. I'll ask clarification.
Okay, thank you so much.
I'll post the email on the chat for you for assistance.
Okay, thank you, Millicent. Leonard and Lillian, I think we have tackled all the questions on chat, and I do not see any other hand up, so I will hand it back to, is it to you, Leonard, or to Lillian? So
Yeah,
one
maybe,
of you.
Yeah, before maybe Lillian comes in, just from CBK, I think for us is just to appreciate everyone for this chance, especially the organizing team back there, Lillian, and the president also for leading us in this. We are grateful. We thank you for coming in and for all the questions that have come through. It was a good start. We'll definitely be, improving this as we have another chance to interact whether physically or virtually. You can make further clarifications on our platforms, social media platforms, or directly through calling us or on email. We have contacts on our websites. We are ready to help you on anything that you need us to facilitate. And thank you very much. Back to you, Lena.
Yes, thank you so much, Leonard, and your team from CBK. And I'd like to appreciate the mode of delivery and also the interactive discussions that we've had, especially from the plenary. So this has been a very informative discussion. So thanks for that. And we hope that we're going to have continued support and collaboration in the future. IK has a membership of over 13,000. So bet we are going to continue this collaboration to ensure that members are always praised of the various investment options that they have. I know a lot of questions have come in about MMF, but this session was really for sensitization purposes to allow our members to be able to make informative decisions. So allow me to move to the next thing, which is to have a vote of thanks from our second vice president at the Institution of Engineers of Kenya as we bring this to a close. Engineer Christine. Over to you, Engineer Christine.
Thank you very much, Engineer Lilian Kilatia. I hope you can hear me. Good
Yes,
evening.
Engineer Christian.
Good evening, ladies and gentlemen. First, I am thoroughly, even before I say anything else, impressed that the ratio of presenters is 20 to 80. Thanks to Leonard, there was Millicent, there was Charlene, there was Salma. So on behalf of the Institution of Engineers of Kenya, and in my capacity as the second vice president, it is my great honor to deliver this vote of thanks as we come to the close of today's insightful and timely webinar on investing in Treasury bills and bonds, graciously facilitated by the Central Bank of Kenya. And I want to believe that our next hot topic will be the money market fund. You have seen there are quite a number of questions that have been asked, and I'm also happy that the question on the sovereign bonds, well, as much as it was out of the scope of today's discussion, was also answered. So I just want to extend our sincere appreciation to Central Bank of Kenya for partnering with IEK and for availing such knowledgeable and experienced speakers to walk us through the intricacies of government securities. Your commitment to financial literacy and public education is commendable, and we are truly grateful for your continued collaboration. And to the engineers, if you can invest between 2 to 25 years, it means that you can actually invest for our young children. So to our distinguished speakers and facilitators, thank you for your clear, comprehensive, and practical presentations. You have demystified what often seems like a complex subject and empowered our members with the knowledge needed to make sound investment decisions. The clarity with which you explained the mechanics, benefits, and processes involved in the Treasury bills and bonds was truly commendable. To our members, guests, and participants, thank you for taking time out of your schedule to be part of this session. You have really asked very many questions. You have engaged. Your engagement, questions, and feedback were invaluable and are a testament to the interest and importance to this topic holds within the engineering profession. At IEK, we remain committed not only to advancing engineering profession, but also supporting the holistic growth of our members, including in areas such as financial wellness and investment literacy. As we conclude, let me reiterate our heartfelt gratitude to all who made this event a success. the Membership and Welfare Committee, our Secretariat, and even our President for gracing this occasion. Let this be the beginning of deeper learning, better financial choices, and more strategic investments among us. I also want to thank the council members who took time to actually attend this very important session. Education is about continuous improvement. You now know where you can bestly invest your monies and where you are guaranteed a very good investment opportunity. We were also taken through the issue of the brokers. Maybe that is an area in the future you may want to expand a little more about the brokers. God bless you, and may we all move forward, empowered and enlightened. Stay safe, stay invested, stay inspired, stay connected. Thank you, thank you, thank you. Back to you, Engineer Lillian. Thank you.
Thank you so much, Second Vice President of the Institution of Engineers of Kenya, for that very succinct vote of thanks. And that brings us to the end of today evening's presentation. This was being live streamed on our YouTube channel, that is IEK YouTube channel. So you can also look at that if you missed out on something, but we're going to send you the presentations and the recording link. So enjoy your evening, members, ladies and gentlemen, and thanks once again, CBK team. Bye.
Thank you very much. Bye.
Bye. Thank you. Bye-bye. Thank you.
Bye.
Bye, everyone. Thank you very much. Bye-bye.
Bye, thank you.
Bye.
Bye-bye.
Bye.
Bye.
Bye-bye.
Thank you.
Bye.
Bye.